total RV shipments in May were the biggest on record, up 11.8% year over year.
It's official. The RV market crash is here. Millions of like-new rigs are being dumped across America this quarter for pennies. Dealers aren't offering deals. They're bleeding cash. Those $120,000 Class C rigs selling for $60,000 or less. And every week, prices keep falling. Banks are choking off credit. Interest rates are killing profits. And lots are turning into liquidation zones. But here's the part nobody's saying. This collapse could be your biggest buying window ever, if you time it right. The flood nobody admitted. Right now, the proof is parked in plain sight. Dealer lots across America are jammed with like-new rigs that owners once swore they'd never sell. Rows of 2022 and 2023 models showing barely 3,000 miles sitting under faded price-to-move banners. September auction data tells the story. A 22 Jayco Redhawk hammered at $84,000 after listing for $119,000 just months earlier. No flood title, no damage, just desperation. That's not a deal, it's retreat. When so many late model units hit the market at once, it means inventory has overwhelmed cash flow. Here's the gut punch. That well-kept trade-in you babied through every oil change just lost a third of its value. Dealers can't take more, and banks won't lend on falling assets. The flood looks like opportunity, but it's erosion. A quiet slide that began not on the lot, but in the credit offices. What you're seeing on the lot is only the surface pressure. The real squeeze begins where the money moves, the floor plan squeeze. Dealers don't truly own most rigs on their lots. They borrow them through floor plan financing, paying daily interest until each unit sells. When rates hovered near zero, the cost barely mattered. Now, with prime above 8%, every unsold RV drains hundreds in fees each week. One Indiana dealer admitted monthly interest rose from $12,000 to over $40,000 in a single quarter. Multiply that nationwide, and the cash burn hides behind fall clearance banners. To survive, managers slash prices out of desperation, not generosity. They're racing bank deadlines, not chasing sales goals. That's why identical models can drop $15,000 in days. To the sharp-eyed shopper, those markdowns look like opportunity, but beneath the shine, they're proof of a deeper collapse. When financing costs exceed profits, liquidation becomes survival. And as the pressure mounts, some dealers aren't just discounting stock, they're abandoning it altogether. If the dealers are surrendering stock, the next question is, who's losing the rigs they already bought? If you've spotted empty dealer lots or rigs piling up near you, drop a comment below and hit like. Every post helps map where the real dump is happening. Your insight shows others where prices are truly breaking first. Repossession morning. At dawn, flatbeds move quietly through neighborhoods, hooking and hauling away rigs without a sound. Across the Midwest and South, lenders are reclaiming RVs from owners who financed at 5 or 6% during the boom and can't survive today's variable hikes. A Texas bank reports a 43% jump in recreational repossessions since July. These aren't junkers. They're clean, low-mileage units families fought to keep. A motorhome financed in 2022 for $600 a month can now exceed $900 as rates and insurance rise, breaking budgets faster than any mechanical failure. To anyone waiting on the sidelines, those repos signal a surge of supply and even deeper discounts ahead. But for the industry, each recovery erodes confidence and tightens lending. The tow trucks aren't cleaning up a collapse, they're exposing one. The imbalance started years before they rolled, and it's still pulling the market apart today. Because behind every loan and every lost rig sits a bigger problem: the factories that built too many to begin with. The overbuild hangover. Between 2020 and 2023, manufacturers built over 1 million RVs per year, the largest surge in history, chasing lockdown demand that vanished once travel reopened. Plants in Indiana, Ohio, and Iowa expanded production, flooding lots with units the market couldn't absorb. Now those same factories face rows of unsold rigs aging under tarps as depreciation replaces demand. Anyone watching the lots fill up can see the truth. Those steep discounts exist because dealers are dumping inventory below cost just to free their credit lines. For owners, it means falling values even if their rigs never move. The used market is buckling under its own excess, and no rebate or refinance can stop it. What began as freedom on wheels has become another post-pandemic correction built on easy credit and an economy still searching for balance. And as this factory backlog spills into the retail lots, the next phase begins. The quiet war inside dealerships fighting to survive what they created. The sticker lies. Walk onto any dealer lot this fall, and you'll see banners screaming $30,000 off in bright red. But that's not mercy, it's math. The discount exists only on paper because every hidden fee rebuilds it. One viewer shared a purchase sheet from a Florida dealer showing a 2023 Grand Design reduced from $115,000 to $92,000, but the doc fee, prep fee, and protection package added $8,000 back. Then came a 3-point interest markup over the bank's rate. The dealer's profit didn't shrink, it shifted. These incentives sound urgent, but preserve margin through fine print. The real cost hides in the finance total, compounded over years of unnecessary interest. Smart money follows one rule: slow down, read every line, and do the math yourself. If the deal feels too generous, it's because you're paying for the generosity twice. But even if you dodge the paperwork trap, thinking you'll make up the savings on the road, there's another surprise waiting at every stop: campground price shock. Just a few years ago, a quiet campsite off Highway 20 cost $45 a night with full hookups. Now that same spot runs $70 or more, if you can even find one open. Campground operators are hiking rates to offset empty weekends and higher energy costs. Bulletins from the National Association of R-vee Parks show nightly fees up nearly 40% since 2021, as family-run parks are swallowed by corporate groups pricing like hotels. For travelers who once saw RV life as affordable freedom, the sting rivals fuel costs. A month of stays that once totaled $1,200 now easily passes $2,000, erasing the savings from buying used. The open road no longer shelters you from inflation. It reflects it. Owners trying to stretch budgets are learning that the steepest costs aren't at the pump, but at the gate. Freedom now comes with a nightly surcharge. And while you're paying more to park, there's another set of hands reaching into your wallet: the regulators and insurers who claim to keep you safe. Policy and premiums. The fine print of RV ownership is tightening faster than lug nuts before inspection. Insurance companies, shaken by storm losses and fraud, are quietly rewriting risk models. One corporate fire in Arizona pushed premiums up 5 to 10% nationwide, forcing cautious owners to pay for fleet operators' mistakes. At the same time, tariffs on imported parts, from axles to electronics, are driving repair costs higher. A replacement inverter once priced at $700 now tops $1,000. Every ripple hits the small owner hardest. Insurers raise deductibles, repair shops add surcharges, and simple fixes become financial shocks. The irony is harsh. Policies meant to stabilize the market now punish the careful while rewarding the reckless. For the cautious road warrior, survival means reading every renewal notice and challenging every quote, because today your premium isn't based on your record, it's based on someone else's disaster. And while owners juggle insurance hikes and repair fees, another kind of silence is spreading, this time from the factories themselves. Factories go quiet. Drive through Elkhart, Indiana, once the hub of RV manufacturing, and the silence tells the story. Plants that once ran non-stop now sit dark several days a week, and suppliers report aluminum orders down by half since July. Management calls it a strategic adjustment, but for welders, upholsterers, and diner staff, it means layoffs and lost paychecks. When production halts, the entire chain stalls. And for owners, that silence brings higher repair costs and longer waits. One Iowa customer waited 7 weeks for a slide motor that once arrived in 3. With fewer parts and slower lines, repairs now go to whoever pays most. Yet inside the slowdown lies a strange opportunity. The growing pile of unsold rigs is aging on dealer lots, pushing prices lower. What hurts the factories may briefly help buyers. Those who wait with proof, patience, and timing stand to benefit most, because out of this manufacturing pause, a new phase begins. The moment when buyers, not dealers, finally hold the leverage. The 4 million pile. By late autumn, the glut is undeniable. Nearly 4 million RVs built between 2021 and 2023 now sit unsold or barely used. The breakdown reveals the imbalance. About 45% are travel trailers, 25% fifth wheels, 20% Class C coaches, and 10% the heavier Class A rigs once built for luxury. Each category chases fewer buyers, and every price drop drags the next down. When Class C values fall, fifth wheel listings follow. Dealers stuck with small units slash the big ones just to cover floor plan interest. To those paying attention, this mountain of excess isn't chaos, it's a roadmap. Travel trailers under 20 feet are the easiest to negotiate, especially those from the overproduction years. Class A units remain costly to run, while pre-shortage fifth wheels hold their strength. Knowing where oversupply is deepest helps you buy wisely, not cheaply. But the real advantage comes from knowing which models truly endure. And that brings us to the short list every cautious road warrior has been waiting for. The rigs that still earn their keep when everything else collapses. The survivor list. When markets collapse, reliability turns into currency. Maintenance records, recall bulletins, and auction data reveal 10 rigs under $10,000 that consistently outlast the chaos. Dependable models like the 2021 Jayco J-Flight SLX, the 2020 Winnebago Micro Mini, and the 2019 Keystone Springdale. These units aren't flashy, but they keep rolling when trendier builds fail. Each uses proven layouts, simple wiring, and easy-to-find parts instead of fragile touchscreens or discontinued components that became repair nightmares after the shutdowns. The survivors all share clean frame welds, mechanical slide systems, and complete service documentation. When buying, always review maintenance logs or stamped receipts. A 10-minute check can prevent a $10,000 mistake. These rigs may not sparkle on the lot, but they won't drain your wallet every spring. In a market built on hype, durability wins. Buy what lasts, not what shines, and you'll stay ahead of depreciation. Still, even the strongest rig is only a bargain if you buy it at the right moment. And that window is opening faster than most expect. Before you click away, hit subscribe. The next report tracks which rigs rebound fastest once this dump ends. You'll see the proof, not the hype, and it might save you thousands when the next price wave hits your state. The 30-day window. Timing is everything. Historical resale data from past downturns reveals the steepest drops hit between mid-November and mid-December, when storage costs rise and owners rush to unload rigs before winter. Regional auction charts confirm it. Average sale prices fall 15 to 20% in just 4 weeks. Anyone playing the timing right can save thousands by waiting 20 to 30 days, right as dealers start valuing cash flow over profit. Still, patience must meet preparation. Get financing pre-approved and inspection checklists ready before frost sets in. Because by early January, prime inventory disappears to wholesalers and flippers. Move too early and you overpay. Too late and you get leftovers. The smart window is that 30-day trough where desperation beats optimism. Wait, verify, and strike quickly. Every auction graph this season tells the same story. Opportunity is coming, but only for those disciplined enough to time it right. Yet even during the perfect buying window, not every like-new rig is what it seems. Some bargains hide stories the sellers hope you never read. The hidden damage trap. Every downturn leaves behind ghosts, R-vees that look flawless online but hide damage beneath the surface. Flooded or repossessed rigs are often relisted as one owner or garage kept, but the signs are there if you know where to look. Mismatched cabinet grains, new window seals, or corrosion on seat brackets. A 2022 Forest River in Missouri, advertised as mint, showed moisture under the subfloor. Its VIN traced back to a hurricane zone auction never mentioned in the listing. Protect yourself by inspecting in daylight, opening every hatch, and checking undercarriage bolts for rust bloom. A strong, adhesive smell usually means mold. Always ask for the title first. Hesitation is a red flag. Real bargains survive scrutiny. Traps collapse under it. In a crashing market, patience protects better than urgency. This final check ensures that the deal you win today doesn't become the regret you pay for tomorrow. Because once the dust settles and the smart buyers have claimed their rigs, the next chapter begins. Rebuilding a market that finally learned its limits. The owners who stayed standing. When the market cracked, not everyone folded. Some owners held their ground, not through luck, but through patience. Jim and Carla from Kansas bought a 2021 Keystone Passport during the boom, yet never treated it like an investment. When prices fell, they kept it maintained, handled small repairs, and used community forums to trade parts instead of paying. Dealers, their yearly costs dropped from $5,000 to about $2,000. And when listings collapsed, their rig held nearly twice the value of others. Across the board, patient owners who maintained instead of panicked preserved both equity and control. A few even rented out their rigs to offset expenses. The lesson was simple. Those who manage the market survive it. In downturns, the disciplined outlast the desperate. True value isn't about guessing the bottom. It's about weathering every wave until the storm finally runs out of fuel. But not everyone wants to ride out the storm alone. A new kind of ownership is emerging, one built on cooperation instead of competition. The co-op movement. Across the country, small groups of RV owners are quietly rewriting the rules of survival. Instead of paying full price for storage, maintenance, and insurance, they're forming cooperatives to share costs and control. 5 friends in Iowa leased a warehouse bay together, paying under $100 each for space that would cost 3 times more alone. In Oregon, another group cut nearly $3,000 per rig annually through shared insurance and bulk parts orders. The math is simple but powerful, and it threatens a system built on keeping owners separate. Dealers and insurers rely on isolation to maintain profit. Co-ops flip that dynamic, turning scattered owners into informed collectives that negotiate like fleets. To the seasoned road warrior, this isn't just independence, it's evolution. Not spending more, but spending smart. Freedom now means leverage, and that leverage grows every time owners stand together. And as owners adapt, the larger market begins to move again, showing the first signs of what the next cycle will look like. The next market shift. Early data from the first quarter of 2026 shows a slow rebound, not a boom, but a return to stability. Shipments are expected to drop to about 350,000 units, down from over 500,000 at the peak, finally forcing prices to find a floor. Anyone thinking of listing now should pause, sell before spring, and you could lose $5,000 to $10,000. But wait 60 days and shrinking inventory might hand you back the leverage. Buyers should watch timing too. The best window sits between December clearance sales and March reorders, when dealers quietly move discounted trade-ins. This cycle proves that markets reward preparation, not panic. The last 2 years of data confirm that waiting out the noise protects real money. Whether selling or buying, the smart move isn't about luck, it's about knowing when supply meets demand. That rhythm is shifting again, and every owner now faces one last crucial decision. Because when the dust finally settles, it's not the factories or the financiers who define the road ahead. It's the people who still believe in using it. The road ahead. The chaos stripped away the illusion that the RV lifestyle was ever about luxury. It was never luxury, it was freedom. And freedom now demands proof. As the market steadies, the smartest move is simple. Wait, verify, and buy with evidence. Always check VIN history before paying a deposit. Demand documentation for every replacement part, and walk away from any deal that dodges questions. The road ahead belongs to the informed, not the impulsive. Over the next 30 days, the market will decide who pays and who profits. If rigs are still being dumped, speak up. If your local lots are stabilizing, note it. Those signals reveal where this collapse finally ends. Knowledge isn't fear. It's the kind of insurance no one can cancel. The market may forget what something's worth, but the smart buyer never does. Buy slow, buy right, and keep your freedom intact. The RV crash isn't coming. It's already here. But in every collapse lies a comeback, and the next 30 days could define who wins that rebound. If you've followed this far, you already see what most buyers don't. The proof, the patterns, and the timing that separates panic from profit. Don't miss the next move. Subscribe now, because the next report tracks which rigs rebound first, where the real liquidation ends, and how to spot the turn before the dealers do.